Hello, guys. Welcome to another session. So, in this session, I'll be talking about one of the common questions that I always get from many aspiring traders that, can I start trading with 10,000 rupees capital? See, the answer is both yes and no. Again, it depends upon your expectations and the approach that you follow. See, 10,000 is sufficient to enter the market, and 10,000 is very much sufficient to start with option trading, but it's not a magic wand to multiply your wealth overnight if that is your expectation. Instead, it's a great starting point to learn the stock market and develop the essential trading skills. So that's exactly what I'm going to discuss. So let's dive into the right strategies, the common mistakes, and the realistic outcomes whenever you trade with this kind of capital. So most of the time, it will be the college students who are coming with this capital with some more expectations without much knowledge. Okay, so this session is basically addressing those who are trading with this less capital. Let's try to understand the stock market journey first. See, the stock market is not a lottery machine. That's something which you need to understand. Success comes from consistent learning and disciplined execution, and that takes some time. Renowned investors, if you take the bigger names like Warren Buffett or Rakesh and Jinwala, they didn't amass wealth overnight. It's a long journey, and if you're starting with 10,000, your focus should be on learning the market dynamics rather than expecting multi-fold returns in a short period of time. Remember, the market offers infinite opportunities, but it also demands patience. So your first 10,000 is your tuition fees for understanding the market. And if you can consider like that, then you will not be disappointed. Okay, that's the first advice that I want to give you. That 10,000 that you're bringing in, if you consider that as a tuition fee that you're giving to the market, then you won't disappoint. Otherwise, it is going to be very difficult. And if your expectation is that the 10,000 that you're bringing in and then you're going to make 10 lakh with that, then that is never going to happen. It never happened also. Okay, so you know what you can do with 10,000 in trading. So with 10,000, I'm talking about the case of that college students or those who are just entering the market with 10,000 capital. So you can try with intraday trading. You can start buying and selling stocks within the same day. That's what you mean by intraday trading, right? So that's something which you can do. And never start with the options when you start with, right? You will start buying the stocks and slowly that you can do. And then you can also do swing trading with some small quantities. You can buy, hold positions overnight for few days, and that way you can make some profits. Investing, allocate some fund for long-term growth in stocks or mutual funds. You can select some of the stocks like HDFC or some blue chip, the stocks which have the long-term potential, like HDFC you can go with, ICICI Bank you can go with, SBI you can go with. These are long-term. If you see there is good prospect, so this is something which you can do, investing in stocks, or safely you can invest in mutual fund also. And there are SIPs about which I have already done the discussion. So see, my point is, you can start with intraday trading in stocks. Okay, you can analyze how it is working out. You can do swing trading again in stocks. You can do investing also. So I have never discussed about options here. So the limitations are there when it comes to options. See, 10,000 is insufficient for option selling, which you cannot do. Or even you cannot trade the futures with 10,000 capital because you need higher margin for futures and option. But option buying, it is possible. Even with 1,000 rupee you can do option buying, but again you are exposing yourself to the bigger risk. So when you are coming to the market, it is not advisable that you are going or getting into the option buying without knowing what is options and what are the different parameters which are connected with options. Without knowing all these, it is very much difficult for you, because the moment you see the option with lesser price, you may enter into that which is going to be out of the money option, and eventually this is going to end up in loss most of the time. See, if you see out of the money option where 40 delta is also out of the money, 30 delta is also out of the money. So when you see lesser capital, You will look for lesser premium. That means you will go with lesser delta. Lesser delta means lesser probability. So let's say you are taking a delta of 20, which means 20% is a success ratio, which means 100 trades you take, only 20 will be successful. So inherently, only 20% success ratio is there, and you're getting into that because of the lack of capital. Then you eventually end up in losses. You take 3 4 trades, that means maybe first trade luckily you will win, but that will not be the case. You cannot survive. Okay, so small capital have that limitation. Knowledge also is required, so that limitation is there with you. So option buying is not possible. Option selling you cannot do because you need capital margin. Futures also you cannot do because of the margin requirement. So my point here is, you focus on stock trading or systematic investment plans like the SIPs in mutual funds. So this approach actually allow you to experiment and learn without excessive risk, and you don't want to make mistakes. You will be able to learn, you will be able to see the market, and you will be able to see the moves and everything. And maybe after 1 year you can come into options, but now what people are doing is straight away they're coming to the options. So that's the biggest danger and the biggest risk you are exposed to. So what is the right trading approach? See, when you're trading with this 10,000, it requires realistic mindset. So you need to prioritize learning over profit. And you are not here for profit when you're trading with 10,000. I told you already, this is going to be the tuition fees that you're going to give it to not any mentors. The stock market itself is your mentor, and you're going to give it to the stock market itself to teach you the things, to make you understand the things, to give you that real time experience. Okay, so prioritize learning over profits and avoid over trading or taking excessive risk. So that's why I told you, don't get into options in the beginning if your capital is very less and if your risk appetite is very less, if you're a college student. Otherwise, also you can simply easily make 500, 1,000 rupees, slowly without taking much risk. So again, stick to a trading plan with clear entry, exit, and stop loss level based on what you have learned from your mentor. If not, stock market will teach you things. But stay disciplined and don't get into option buying in the beginning. You cannot go with futures, you cannot go with option selling. So forget about options part. Start slowly with intraday or start investing in SIPs and see the market behavior. For instance, if you trade intraday, focus on small, manageable position. Don't take too much of leverage. Allocate a portion of your capital to test various strategies and learn from the outcomes. For example, you might have heard that 220 moving average EMA strategy, or you might have heard 20/50 EMA crossover strategy, or you might have heard about something related to MACD strategy or RSI strategy. So you can try checking these because you need that practical experience and hands-on experience. So that is how you can start trading. Now, what are the common mistakes that the beginner make? First and most important is overtrading, taking too many trades in a single day. That is something which is going to, burn your capital because you will be paying too much of taxes and charges and brokerages, which you will not understand in the beginning. And that lead to higher cost and emotional stress also. Okay, again, ignoring stop losses. You may think that the market will, if it is going down, and if you have taken a position on the upside, you're expecting the market to go up. You keep expecting the market will go up. So you won't take the stop loss. So trading without stop loss actually increases the risk of wiping out your account for sure. Again, the major problem, the major mistake of the beginner is unrealistic expectations. You see something in YouTube and see something in Instagram, social media, and believing that 10,000 can turn into 1 lakh in a matter of couple of days, in a matter of few trades, which is impractical. So you will see some advertisements, or you see some videos that 10,000 to 10 lakhs, which is impossible for you when you're starting. There might be people who have done that, but with a lot of experience, after losing a lot of money, they might have done that with huge experience that they've got. But it is impossible for you when you're coming to the market for the first time with 10,000 capital. It is impossible for you to make that 10 lakh or 1 lakh, which is completely unrealistic expectation, and you'll get trapped in that. Again, lack of discipline, which is another major mistake. So failing to follow the trading plan, or reacting emotionally to the market movement. You cannot see the loss, so you react emotionally. So these are the main problems. Like overtrading is one of the biggest problem, ignoring stop losses and unrealistic expectation, and the lack of discipline. So these are the 4 common problems that I have seen from many of the budding traders or the aspiring traders that I have come across and I have spoken. I speak with a lot of people. So I have seen these are the main, major problems that they face. And eventually they will get down emotionally also. So you will again ignore the cost and charges in trading. That's something which is very important. It's not only brokerage, there are transaction costs, there are many other securities transaction costs, there are many other charges also. Brokerages are there, taxes are there, other charges significantly impact the smaller accounts. Imagine you're buying one stock. Let's say you are buying in Zerodha. Okay, one quantity you are paying 20 rupee brokerage. Let's say I am buying 1,000 quantities, still I am paying 20 rupee brokerage because per trade. So those who have larger capital, you are actually paying the same brokerage, though the transaction cost and everything is different, but brokerage is at least the same. So those who have smaller accounts and smaller capital, these charges will affect you significantly because for others that is negligible, but for you that's not the case. Okay, so that's what I want to discuss. So you see, it's fixed cost, right? The brokerage is fixed cost per trade. So someone who's buying 500 quantity or even 1,000 quantity, he'll be paying 20 rupees, and for selling also 20 rupee. But for you buying one share also, it will cost the same. So you need to understand that this charge will affect the small traders and the smaller accounts more than the large traders or larger accounts, because for them this is negligible. Okay, so to minimize the impact of charges, what you need to do, limit the number of trades and focus on high probability setups. So that's something which you need to do, but that's the thing that many budding traders actually ignore. Now, you need to build skills through experimentation. So I told you this 10,000 is something which you're going to consider as a tuition fee. This is something which you're using to experiment things. So your 10,000, you're going to experiment and develop a trading style that is going to suit you. So identify if you are an intraday trader or you are a positional trader or you are a long-term investor. So you will be able to understand, may not be with this, maybe with some time. So it's all about how long you can survive with this 10,000. Will you be able to survive at least 3 months or 6 months? Anyway, eventually this is going to be given to the market as a tuition fee. But the more you survive, the better will be. You will understand what kind of trader you are, what kind of mindset you have. If you have the mindset of an intraday trader, you will understand. Or if it is a positional trader, then you will understand. Or long-term investor, then also you will be, and you should be in a position to understand. Analyze your trades to understand the patterns, the risk appetite, and the emotional triggers. And again, treat this amount as a learning investment to refine your knowledge, to refine your strategy, to refine your emotions and your skills. So the goal is to build confidence and understand the market behavior, not to chase quick profits or not to make overnight wealth, which is impossible. So you are going to give importance for that learning and building confidence. Okay. So again, if you look at SEBI regulations, that's again emphasizing, protecting the retail investors from excessive losses. For instance, the margin requirement in F&O trading are designed to ensure traders don't take unsustainable risk. As a beginner, focus on stocks or ETFs until you gain confidence and experience. So that's why I told you start with stocks. You start with SIPs. So that will help you to gain that confidence. That will help you to understand the market behavior. That will give you some kind of experience. So the market is not going anywhere. Take your time to learn. It may take 2 years, but once you learn, then the future is yours. Okay. So see, the key to success in trading is not luck. Many people talk about luck. It's about consistency. It's about discipline. It's about execution. It's about having a strategy. It's about having a plan and executing the plan. Right? So a lucky trade might turn this 10,000 into 50,000, but without proper skills, that entire 50,000 you will wipe out on another day. So those gains are actually unsustainable. So instead, what you need to do is follow your trading rules diligently. There is no compromise on the rules. Improve your skills incrementally. Keep watching videos, keep reading the books, keep understanding the market. Watch the market more and more. If you decided that your future is here, then spend more time with the market. Okay, so scale your capital gradually as your confidence and strategy improve, not all of a sudden. So what I want to tell you in conclusion is, see, starting with 10,000 is not about making quick profit. You're not going to turn this 10,000 to 10 lakh overnight. It's about building a strong foundation for your trading journey. It's a beginning, and it's for that experience that you're going to get. So focus on learning, avoid the common mistakes that we have discussed, and adopt a disciplined approach so you can use the small capital to understand the market behavior. As I told you, this is a tuition fees that you're actually going to give it to the market for teaching you the market behavior, for giving you the confidence, for giving you the right strategy and everything. So remember, guys, trading is not 100-meter race. It's a marathon. It's not a sprint. So what we need is stay consistent, stay disciplined, stay focused, and most importantly, enjoy the process. The process is very important, right? Forget about the outcome, follow the process. So that's about this session, guys. I hope you got some knowledge about trading, and if you are a beginner, how to trade with low capital and everything. So thank you so much. In case if you are interested to join the course or if you need any help, you can get in touch with me. See you guys in the next session. Thank you so much.